Welcome back to another stock market open live stream. Today we have, well, it's the day after Jerome Powell's 60 Minutes interview where we didn't really get any insights on jobs. We just basically got the idea that probably still have to unprice that March cut. Not that great. We did end up getting the odds of a March cut go down from 20% to 17%, so somewhat useful to see that get unpriced, since it does seem like that's relatively unlikely with the strong job numbers we're having, so it'd be nice to see that get fully unpriced. But in the meantime, we do have Caterpillar revenues that came out. Let's see, EPS coming in at 523 versus the 473 expected, and probably about that's up about double year over year. Let's see here. So backlog fell a little bit. Doesn't see significant changes in inventory. Up, how much is it up now? Let's see. Looks like it may have at one point gone up as far as 7%. Caterpillar here. This is great as an industrial. I think a lot of people have gotten a little bearish on the industrials. But let's take a peek here. So we've got, stock up 4.5%. At one point up as high as 7%. Oh, look at that. You've actually had a nice run on Caterpillar since about December. So December, or not, it was just midpoint in December. December 14th-ish. Nice move up here, going from about 264 to 315. We've got, as usual, your interest rate sensitive, a little red. Not a surprise with J-Pow indicating a little bit of a later or start to a rate cut cycle. Whereas NVIDIA is still soaring. Look at this. NVIDIA up 5% on Friday, now up 3.19% in pre-market here. Absolutely wild. So that makes sense when you've got the cash-rich companies throwing money at these particular companies with really no regard to what the price is, rather with regard to, hey, we need more, what's it called? We need more, oh, there we go. We need more AI chips, no matter what the price is. Okay, so Estee Lauder to lay off about 3 to 5% of its workforce, starting restructuring during Q3 24, charges of $500 to $700 billion. EPS coming in at 88 cents, though. That's a beat versus 55 expected, 428 versus 438. And that is on the net sales figure for billions. Let's see. Estee Lauder really popping on this not only beat, which the beat isn't particularly large. I wouldn't say it's large at all. It's just, it seems like, there's almost layoff euphoria here. Estee Lauder has really gone into the toilet. We've got their stock lower as of Friday than where it was during the COVID pandemic. The stock now up 16% to about 155 from its pandemic low of about 133, 134. So this is, in case you don't know, a cosmetics company, and it would be interesting to kind of get a little bit more of a breakdown of all of the various different companies that they actually own. Let's see here. They've got Clinique. Well, I've heard of that one before. They got a ton over here. Tom Ford Beauty, Smashbox, Too Faced. Oh, I've heard of that one. MAC Cosmetics, Bobbi Brown, Afrin Beauty. Huh. Anyway. Okay, so they are... let's see here. How many? They were founded 78 years ago. They have 63,000 employees. And so what are they laying off again? 3 to 5%. Okay, got it. So that would be around, let's see, 10% would be around 6,000. 1% would be around 600. So about 1,800 to maybe 3,000 folks getting laid off over at Estee Lauder. Well, it's going to be interesting to see the continued labor market rebalancing. Let's see. Okay, so take a look at what the suits have. All right, suits. Treasury's polarity leaves them open to short-term pullbacks. Yeah, last week after the payrolls, benchmark revisions, higher than expected payrolls for January. Okay, wait, this is interesting. The market will always, in the main trade data at face value, I think they mean take the trade data at face value. As noted last week, after the payrolls benchmark revisions, a higher than expected payrolls report for January should be treated with skepticism, given last year's slowing in jobs momentum illuminated by the revision. Moreover, that was ratified by the benchmark revision for the year to March 2023 of negative 187K, okay? But that did not impede the Treasury sell-off. Let me look into this a little bit more. To me, it sounds like the outlook is essentially what they're describing as a bit weaker here. So higher than expected job openings from the JOLT survey. Okay, that goes back to JOLT. I don't know that I so much care about that. Huh. Yeah, but that is what they're referring to. Let's see. As noticed last week after, okay. The current downtrends in the revised data suggest the jobs market could have ended 2023 with less momentum than thought, which would add skepticism to Friday's payrolls data, especially if seasonal adjustments or the birth-death model adjustments are large. Yeah, that's always what's so frustrating about, unfortunately, the data that we get, is the market moves so vastly on single pieces of data and regularly enjoys ignoring the broader trend. I know Nick T is always great at having some trends, though, so let's take a peek here. So here we go. Index aggregate weekly payrolls for private sector workers. So clearly, we can see the growth of, this is pay, right? Weekly payrolls, pay. This is a growth in pay, rotating down, year over year being dark blue, 3-month annualized, doesn't break out or anything bizarre. And we know that can be very volatile. Okay, let's get another one, Nick. Let's see here. Benchmark revisions. Yeah, okay. I remember this one now. So, the revisions, you know what we can actually do is, let's do this. I think it'll be useful. Let's take a screenshot of that. And let's see if we can play with that data a little bit, just to understand it a bit more. Okay. There we go. Pop that up. Okay, here we go. I will hide myself for a second so we have a little bit more of a look here. And let's get a nice little thin line. There we go. So what I'm looking for is essentially some form of a trend. It's really difficult actually to create with that bizarre revision spike there. I mean, clearly the trend is down here from these remarkable job gains following the pandemic of 600,000 and 500,000. Clearly, we've moved down into a probably more consistent, you know, I would say, what, average of 200,000 jobs. But that's roughly in line with what you get in long term. That doesn't really imply a jobless recession. Let's see here. Let's go with non-farm payrolls. So if I go with non-farm payrolls, U.S. employees, non-farm payrolls, month-over-month net change. Let's grab this. Let's go back out of COVID. Let's go before COVID. So what we'll do is we'll go January 2020 back to, let's say, 2010. Let's see what we got. So we got about a 10-year period there. Yeah, 200, roughly 187 or so. That seems to be about the average. So really, you know, even with where we've declined to on this chart, and it's call it an average of 200K, it's just not indicative of a damaged labor market or a weak labor market, which is interesting because a strong labor market will enable the Fed to definitely stay high for longer. The implications of that aren't great for your interest rate sensitive, whereas obviously they don't make a difference to the cash-rich recipients like the NVIDIAs. Although these things can change very rapidly. Right? You can go from an economy that's solely, or a stock market that's solely rewarding certain sectors to under rewarding those and then quickly rotating to something else. The question is when, and nobody knows. Apple up 49 bips after the Provision launch. Let's take a look. If we go to broader moves here, we've got Estee Lauder, Estee Lauder, Nvidia, and Caterpillar making their larger moves. And in the on the downside, you've got Plug. We'll actually see how TMF moves in the morning, though it's interesting when we actually get the market open. But we can probably, oh yeah, we're up 8.6 basis points on the 10-year. We're back to 4.11. So 10-year is sitting at, yeah, 4.11. 2 years at 4.43. So we're actually sitting about 32 basis points inverted. All right, and then let's go back to El Sudis. Oh, and I wanted to see how K-Web's doing this morning, how China is doing as well as Alibaba. Okay, up about 69 basis points in pre-market. Drop into Baba here, up about 1% in pre-market. Zoom out on the day chart, volatile there. Okay. The recent spike of drone attacks on Russian energy infrastructure is potentially a bigger risk to fuel supplies than the Red Sea. Ooh, how interesting. This is a report presently by Bloomberg and their oil reporter. And the suggestion here is that while Houthi attacks are causing many fuel hauling tankers and other types of vessels to go around Africa, adding to shipping costs, delaying arrival or possibly causing cargoes to head in different directions, like go to different destinations, are all a problem. They haven't really changed how much oil there is in the world. However, drone strikes in Russia have been actually destroying supply. These are Ukrainian drones that are targeting facilities in Russia to try to damage oil production in Russia. Which makes sense for Ukraine, right? Hit Russia where it hurts, so to speak. However, it is also interesting because that begs the question of financing, Ukraine, essentially making the cost of oil greater throughout the world. Whether or not the actual oil price movements are large now, it doesn't so much matter, given that they could be substantially lower if we didn't have as many geopolitical issues. Let's see what oil's doing. Yeah, oil's sitting at 77 on Brent. Okay, let's take a peek at Mickey D's. Okay. Mickey D's. All right. Okay, so McDonald's comp sales missed 3.4% versus 4.79%. Adjusted EPS beats 295 versus 282. Revenue 641 versus 645. McDonald's down about 1.4% after the miss. Let's see here. MC, yeah, still about 1%. Okay, CapEx 2.5 to 2.7 bill. Opening, sees opening 2,100 restaurants globally in 2024. Wow, that's a lot. I want to see their commentary on inflation when they actually get their earnings call out. Mostly because some of that lingering food inflation has left, obviously, a lot of frustration for folks who shop for food, obviously, which everybody does, and visibly see these lingering signs of inflation. This creates so much frustration in the economy. You really, again, have a tale of two economies here. You've got people uninvested in assets who are struggling with higher prices for things, whereas cash-rich companies like the Microsofts, Meta, Apple to some extent, Tesla, they're throwing money at your AMDs, NVIDIAs, and otherwise. It's very interesting. All right, let's see. Let's give all these storms out here. We're going to hop into CNBC for a moment once we actually can. Storms over here like to reset everything. Darn California oceanic crap. That's what I call it. Oceanic crap. Anyway, all right. So, what else? Okay, here's a Kashkari comment. Let's take a peek at what Mr. Neil Kashkari has to say. He used to be a dove. He turned into a hawk. Let's see what he says today. Minneapolis, and I also don't think he's a voting member. Let me see. All right, FOMC voting members. So, we have 2024, Powell, Williams, Barkin, Barr, Bostic, Bowman, Cook, Daley, Jefferson, Kugler, Mester, Waller. Yeah, no, he's out. Out as a voting member. No votes for you. 1 year. All right. So what does Kashkari have to say for us? Kashkari, non-voting member of Fed. He says, it is possible, at least during the post-pandemic recovery period, that the policy stance that represents neutral has increased. Well, yes, that basically means even though we might cut, where we stop with rates might be higher once we determine or try to figure out where neutral is. Neutral rate of interest may be higher, which gives the FOMC time to assess upcoming data before lowering rates. Right. That's what nobody wants to hear. Nobody wants to hear that. More time needed. Let's see. With less risk that too tight policy will derail the economy. Less risk of too tight derailing economy. Yes, yes. All right, get that going again. There we go. Policymakers have kept rates unchanged since July. We know that. Fed Chair Powell said policymakers will likely wait beyond March. Yes, we got that already. Supply side factors rather than monetary policy have done the heavy lifting. Yeah, this is the argument that Powell makes as well, that basically, hey, you know, if the heavy lifting is done, the last bit might be a lot harder to conquer, and we basically might end up at a higher level of inflation than where we want to settle. And so that would be another reason for potentially waiting a bit longer. Let me see here. Okay, still waiting to get this tagged in. Give me a sec here. Come on. You can do it. There we go. There we go. Darn oceanic crap. Resets everything. Oh, let's listen to this dude for a sec. No. Oh, great. All right, whatever. I'll figure it out. So anyway, Fed Chair Powell said policymakers will likely wait beyond March. We got that. Okay, and okay, well, that was, okay, Kashkari, who doesn't vote, wrote a series of essays. In September, he assigned a 60% chance of a soft landing, but warned of a scenario where inflation could become entrenched. Yeah, I guess I don't really see that. I mean, it's entirely possible, I suppose, that you could settle at a higher level, but it's so challenging to see that looking at earnings calls. Let's take a peek at the latest Trueflation update. I always add about 0.5% to what they're saying. They're still at 1.35. Okay. And we go to Nick T. We'll grab his 6 to 12 month charts. Take a peek here. Employment, there's ECI. Remember, we'll get our next CPI on the 13th. Private sector hiring. Yes, there we go. So here's where we sit consistently with inflation. Let's make this a little larger. The goal is to settle at 2. Remember what Jerome Powell said. We don't even need as good of data. Like, we're doing really well with the data that we're getting. We just don't want to see it substantially worsen, right? Just consistently come in at this trend and we're good. the fact that if we look at the 6 or the 3 month, we're actually below target, in my opinion, reduces the chance that, a Jerome Powell fear occurs where inflation ends up settling above that 2% level. But who knows? Maybe they're seeing something or not, or they think that the warm jobs data has a chance of reigniting, or they're just sort of admitting that they don't know. It is all possible. Everything is possible. All right. Let's see, what else? So, chip industry poised to bounce back after tough 2023. I don't know, man. The chip industry had a pretty good 2023, unless we're talking about chip manufacturing. I think chips were a great investment last year. Anyway, all right, let me do this. We're going to hop in. It's Monday. Devices just sometimes need a little bit of a reset. Apparently, that's just how it works. Okay. There we go. We're going to do this for just a moment. All right. So, while we do a quick little restarty doodla on that one, let me see what else I can read off here. So, mass layoffs shouldn't be routine. Okay, well, I think they're just complaining about downsizing is routine in the economy. Yes. Well, and that's somewhat aligned. Okay, I see what they're saying. Somewhat aligns with the idea that you don't necessarily need to have a jobless recession, because just because in January you're getting more layoffs doesn't necessarily mean we're going to cause massive issues with ultimately falling into any kind of recession. Okay. Yeah, I know it's no signal. I'm restarting it. Hold on. Get a chillax, bro. Okay, so that's interesting. S&P 500's Friday jump on negative breadth is a sign. Okay, what is this? S&P 500 finished higher Friday, despite less stocks rising than falling. This hasn't boded well for future returns. S&P 500 futures slumped on the release of data of the nearly twofold jump in non-farm payrolls, which made investors question expectations of a heightened pace of rate cuts. That's true. Wonder how much we're still pricing in for the whole year. Still, what stood out Friday was with negative breadth, which is basically 276 stocks declining relative to 223 that rose. We've seen that 13 times in the past. On average, the benchmark S&P 500 was down 2% over the next 20 days. Ooh, that's interesting. That's basically a little bit of a warning there of some potential declines coming for the S&P. Okay. Let's see if we can now fix this. All right. Very well. All right. So in the meantime, we'll also get a little update on the sticks. Okay. About 10 seconds here to flop this over. There we go. Okay. So back to the sticks. McDonald's still down about 135 on that comp sales miss. Nvidia still pushing to $700. It's 682 there. Whereas Plug Power, Canadian Solar, these guys down 3%. Enphase down 2%. Tesla's down about 169. Boy, yeah, really interesting to see the slog of pain for the interest rate sensitives. Again, though, makes sense. Longer you got to sit there, the more of a breather you take. Yeah, market just unpriced another 3% chance of March cut. So we're now at 86% for no cut March. Let's see what we're pricing in for December. How far are we moving here? So we have, if I go to December, we're going to be looking at a chance of let's go with chance of 5 cuts. 5 cuts is priced in at 59.6%. 6 cuts sitting at 87.3%. So market's still looking at 5 to 6 cuts this year. Let me rephrase how I said that. 5 cuts would be the 57. 4 would be the 87.3. Yeah, sorry. 87.3 is 4 cuts. Yes. Okay, good. All right, very well. Let's take a peek at some of the other suits. So we looked at these suits. Now we will look at the others. All right, let's find out which bank do we want to look at today. How about Morgan Stanley? Given that Mike Wilson. Oh, here's a Mike Wilson piece. What? I thought Mike Wilson was leaving. What is this? How is Mike Wilson still here? Maybe he gives a little note and he'll give us a little heads up as to what's going on. But yeah, there was a note last week that Mike Wilson from Morgan Stanley was stepping down or something. Let me see exactly what it was. Mike Wilson, Morgan Stanley. To step down as Global Investment Committee. Stepping down from his role as chair of the firm's Global Investment Committee, according to an internal memo. Instead, he's going to work with key institutional clients on finding alpha, on seeking alpha. Ah, got it. Okay, so this means no clear indication yet of where he's going. But anyway, where does he think there is alpha? He says, we're encouraged by quality's growth relative to strength last week, even as rates pushed higher. Let's see here. No. Okay. We show that software, our preferred industry within quality growth space, is exhibiting the strongest performance. Yeah, no kidding. It's all the AI, baby. And a large over small. So he's talking about how small caps are basically too economically sensitive. It makes sense. The big companies have all the cash. Where the cash is where the spending is. Simple. Okay. Soft Dallas Fed reading, Consumer Board, or Conference Board's Consumer Confidence Index, Michigan sentiment surveys all pushed higher a little bit on sentiment. Labor market is tight, rates peaked. As the week progressed, we got some data that supported the view the economy may not be slowing as much as some and the Fed had started to believe. ISM manufacturing ticked higher. And then, of course, we had the Stark headline on payrolls. Let's see what Wilson says about that. Bond market, here, let's take a look at this part together. The bond market went with the stronger read of the data and traded sharply lower on Friday, which pushed the yield up, obviously. Pushing out the timing for the first rate cut, taking March down to 20%. Yeah, now sitting at about 17%. This probability was around 90% around the end of last year. That's also true. Perhaps the market is starting to take the Fed at their word that they aren't planning to cut rates in March, despite the bond market's signal that the Fed is behind the curve. Equity market looked through this rate move, driven by large cap quality growth. Yep. For now, the internals of the stock market are suggestive of the idea that a stickier rate backdrop is a disproportionate headwind for stocks. With poor balance sheet and lackluster PP, lower quality cyclicals, and many areas of small caps. How interesting. So small caps suggesting the lowest pricing power, as well as lower quality cyclicals. Interesting. Lower quality. Valuations have been dependent on rates for the S&P 500 up until recently. Yeah, probably. Need more okay. Our view is that we need more confirmation that we're heading for higher nominal growth. Right. In other words, that just one jobs report wouldn't be enough to really indicate this. Let's pull the cues here. No, down 14% on the Qs in the pre-market. Our view is that we need more confirmation, right? The latter, okay. Small business, continue to cite high financing costs. Prefer large caps. I don't think he's wrong about that with large versus small. No, he doesn't actually give any comments on the jobs report. Much that I can tell. Let me maybe I can find it a little deeper in here. No. No. Just a quick mention of it. All right. Fine then. Fine, Mike Wilson. Fine. All right. So, yes. Let's see here. Next. What is next? Next is Treasuries, I think, still moving. Yeah, you're almost up full 10 basis points on Treasuries. It seems like right now, the higher the 10-year goes, the more you're seeing Tesla drop down from when we started about negative 1.3 down to about 2 right now. And NVIDIA continues not to care. All right, next. This was interesting. Boeing, I was reading this last night. I'm like, this is crazy. Boeing found more mistakes with holes drilled in the fuselage of its 737 MAX. Yet another setback for the company. How do you misdrill holes? Those are maybe just the wrong place, and then you don't get an alignment maybe of parts, but oh my gosh, Boeing. It's like top to down failures here. That 737 has been like the death of that company, I feel like. Although the stock actually hasn't been that horrible. It's certainly come back out of the pandemic. Yeah, pandemic low was down. Well, not by much though. Well, no, that was the recent low, 176. I thought we got to 90 bucks. Oh yeah, we did. $89. That's where we got in the pandemic. Yeah, so you're still double that whole of the pandemic. Yeah. All right, so let's take a look at the BTC. Let's see what news we got over here. So BTC is settling over that 43.3 level. But I feel like we've been there for a minute. Let's go out to the day chart. Yeah, still sitting on that 42.2 fib line. Big law bankruptcy fees to reach $2,500 an hour. Oh my lord. For companies like WeWork and FTX. $2,500 an hour? How is it even fair? Scaramucci urges crypto fans to support Biden despite crackdown. Oh. Anthony Scaramucci advised the cryptocurrency community to support Biden over Donald Trump in 2024. Skybridge Capital founder and former Trump communications director said that while the Trump administration would be better for crypto regulation in the short term, in the long term, we're going to create havoc and unpredictability in the legal system. I'd rather take the regulatory fight with people like Elizabeth Warren and Gary Gensler over a macro fight. Interesting line. Don't know about that. Okay. Israel warns for the first time diplomacy with Hezbollah running out. This is no bueno. This is not good. Oh, what do we got here? FDA updates on drug shortages. No, okay. Nothing mega there. Okay. Mickey D's we saw. Elon, what is this? Elon Musk just lost his cage fight with Mark Zuckerberg. Oh, this is for sure about the stock. Let's see. Bond yields jolted higher. Bloody, bloody, bloody. Well, yeah. Okay, yeah. Here it is. It's all about the Magnificent Seven. And then you just line up Tesla next to Meta. We can do that really quick. It's been pretty dramatic. I mean, good for them. trends. Let's go to finance.google.com. If you ever need it, finance.google.com is actually pretty easy for doing a really quick comparison. So you could drop it in here, drop a compare in, and quite useful here if we go to the year to date. Yeah, look at that year to date move. Tesla year to date down 24%, a quarter of the value of the company gone. Whereas Meta decided to add a third of its company. What a disparity. In the 1 year, Tesla's down 3%. Meta is up 155%. On the 5 year, Tesla's up 821%. Meta's up 183%. So 5 year Tesla smokes, but boy, anything less than that, Meta's just crushing Tesla. I wish I could go down to 3 year, mostly because when we, maybe it's depressing, but when you go to Tesla over a 3 year period here, we have basically sadness. So let's see, we are February of 2021 is where we want to go. So about here, okay, we're basically at the lowest levels of 3 years ago. Yeah, because for all of 2021, you were actually substantially higher. So there were 2 low periods in 2021. Those low periods were 180, about 182. Yeah. So 2021 lows, which roughly lines up with the fib level that we have here. Let's go ahead and drop a line under it, just for giggles. Horizontal, there we go. Right there. Yeah, you can kind of see that doubling up over there. I think that's why we've been bouncing there. Still another little downtrend here, though. Creating basically a 3 year low in the company. All right. Next, Israel's foreign minister warned time's running short to find a diplomatic solution to the presence of Hezbollah fighters. Yeah.
Said you can.
Oh, I fixed it. Yes. Okay. Hezbollah, Shia militant group backed by Iran and Israel forces have been exchanging fire almost daily. It's on the northern border. Trying to see if we got any. Israel will act militarily to evacuate citizens from their homes. Yes. Hezbollah is the most powerful militia in the Middle East. Wow. More than 100,000 rockets and missiles available. Jeez. All right, let's listen in here for a moment.
Vacuum cleaners, the price is just so through iRobot. The long knives are out for iRobot.
Well, iRobot's having some really difficult times,
but
given no
just to
longer
go
going to
back
be
to-
acquired by Amazon. Yes.
Right, to go back to Powell.
Yes, back to Powell.
I think that we're now in an era where what he's saying, everywhere, not just with Scott Pelley, is that look, we don't need to cut. We got a great economy. So, I mean, we're not supposed to have a great economy. That's why I started with the industrials. Eaton, Illinois Tool Works, maybe Caterpillar. The shorts have to take Caterpillar down. They cannot let this thing be up. They've been crushed. So, the shorts.
So bad. I know.
Anybody heard of those other than Nate, which goes after companies that don't exist?
All right, let's answer this question here. So Max wonders, do you think the last 20%, now down to 17% of the Fed, of the odds of a Fed rate cut could be due, now back to 19%, could be due to another banking crisis? Yeah, it's possible. Jerome Powell really poo-poos the idea of a banking crisis. And, remember, he still has not mentioned anything about New York Community Bank. Other than the fact that they've suggested, hey, some regionals might end up merging or failing, but basically suggests not a big deal. So I do think that's very interesting. Well, it's not so much that NVIDIA actually needs to produce more and more and more. It's that they're doing it at higher and higher prices because there's so much demand for these chips you basically have this massive inflation for these chips. Mike Wilson stepping down as the biggest buy signal ever. Oh no. Let's see here. I'm just looking at some of your comments here. Apple cash flow from the VR headset? No, I actually would not think that you're going to get substantial cash flow from the VR headset anytime soon. I'm still struggling on putting together, which I will post today, my video on the productiveness of the actual device. I'm still putting that together and still sort of struggling with parts of it. But yeah, stay tuned for that. But yeah, no. There's so much expenditure going out that I wouldn't suggest a massive cash flow for Apple anytime soon from that. See at the Elk Dual Arena or an Elk card. Good old RuneScape. I love the references. Vision Pro in 2 to 3 years will be worth the purchase. Ooh, that's an interesting idea. Okay, a lot of repeat questions here, so we'll skip reading those for now. All right. NASDAQ trying to recover a little bit from that's negative 20 bips down to just negative 8 now. 10-year, where do we sit with the 10? 10-year sits at up 9.2 basis points. All right. Next, we have dollar runs higher, has legs with euro at a turning point. Well, I think the dollar running up always has a lot to do with what happens with your rates. Snapchat looks like it's now laying off about 10% of folks. Let's take a peek at that. And then we can look at the dollar a little more. Well, we'll look at you up really quickly. You up. Yeah, this is really the trend we've seen of rates the entire year, right? Remember, we went from about 3.38 on the 10-year to about 4.1. So we've got about a 30 basis point move in rates here. And that's led to this move. Snapchat plans to cut global headcount by 10%. Could lay off more staff next week. Yeah, see, this always makes me nervous when you see layoffs leading stocks to rise. It's a substantial signal to markets and to companies to basically incentivize more firing. Das makes me very nervous. But then again, I don't know. Those jobs numbers, are they, realistic? Are they, whatever, screwed up due to adjustments? I don't know.
He passed all the tests for the NASA contract. Why should we think that he's a drug addict?
Well, I don't think we should, and I don't think he most likely is not. I think it's two separate stories, although they are related by this idea that some of the board members party with him, so to speak, but it's the interrelationships within the board and whether that is, in fact, a form of governance that is probably not a good one for shareholders. It goes back to the McCormick's ruling, throwing out his pay package in Delaware a couple of weeks ago.
I think that is integral
but
to what happened.
You raised an interesting point, which is who has he ticked off at this point who wasn't willing to turn on him in the past and now is?
Thank you.
Because that's really what's going on here.
It was Lyndon Johnson Rice who left
really
the board
what's going
2019.
on here.
Meanwhile,
thank you. That's really what I was trying to get at.
Meantime, stories over the weekend about the EV slowdown making its way to Europe,
yes.
Where German sales of EVs may fall as much as 14% this year because of fewer credits. Jim Piper cuts deliveries and margins today.
I thought that was devastating.
And they say you should probably take this year to get educated on other non-automotive parts of the business.
Well, you have to, because there's no longer going to be upside surprise. You need to achieve sustainable valuation that no longer upside from the vehicles And by the way, they cut the numbers of the vehicles. I thought that was really significant. I thought that this piece just said you're buying something that is radically overvalued unless they come up with something else. But you know what? It kind of reads, again, I'm going to take Musk's side for a second. This is like what happened with Apple, where the analysts decided to bury it if they didn't have a good guide for the cell phone, and then somehow the stock goes to $179.50, then it bounces back to 186. I think if you look at this and say this is my Tesla file, what should control Tesla, Kathy Wood will take it right up. She'll buy every single share. She'll take it and bid it and take it and bid it and take it and bid until it's up at the end of the day, because that's what the buyers do. They control the float. That's been the case since this thing came public.
And you think that happens somewhere here in the 180s?
Absolutely. They cannot that's what they do. The buyers, the fan person buyers, take and bid.
These street lows of 150, 130, you don't think we get there?
Good luck.
There's still too much enthusiasm.
Good luck. There's too much enthusiasm. And yes, I mean, the Journal may try as best as it can to get Gensler involved and take a hard look at this because of the web of Elon independence. Remember, they related to what, to Zynga in the article?
I just don't think anybody was under the illusion that you were getting a typical board here and a typiel company
My
to
point.
begin with.
That's my point.
You knew that going in. I mean, my God, remember Solar City? I mean, it's different.
If you read the piece,
it's Musk.
If you read the piece, did you really feel differently about Musk? I didn't either.
I didn't feel I learned anything I didn't know.
So he's a genius, and there are times when he has a party.
So your view is just caveat emptor on governance?
You bet. This is not Griselda, which, by the way, is really good. It's not Griselda. It makes it sound like it is. Parties on yachts, you know?
Well, Tesla now worth about half of Meta after that record-setting market cap surge on Friday. Biggest market cap build in a single day by any company ever. We'll talk more about what that means for the business and the future of social media. Take a look at the pre-market. There's going to be a lot to get to this week between earnings.
Yeah, it's really interesting, this Wall Street Journal piece. I was looking at this yesterday. It's always so fascinating to me to see the stock market get so bearish on certain sectors. Oh, EV sales are going to go down. The company will never go up again unless they have different parts of the business. Oh, Elon Musk is a loon. I mean, the Wall Street Journal has like weekly articles about how, whether it's Tesla recalls, which are software updates, or it's bagging on Tesla numbers or bagging on Elon Musk, weekly. And it's so interesting because usually, and I can't guarantee this obviously, but usually it's when everybody turns the most bearish that stocks end up with their greatest outperformance. Think about even Meta for a moment. There was a moment people thought Facebook was completely dead. I personally didn't have hope in Meta either. Mostly because I don't use Facebook. I'm not a user of the product. I think their virtual reality sucks. But whether it was through AI or the stickiness of advertising to people who do use Facebook, the company absolutely dominated in 4x, probably 5x at this point. Really incredible. You look at the end of 2021, and everybody thought, that's it. Not end of 2021, end of 22. End of 22, everybody thought chips were dead. Chips are a dumb industry. Everybody's already bought a new computer during COVID. It's over. You're screwed if you buy chips. I bought every chip I could, evidenced by what we did in the ETF. And that was a great move for 2023. Everybody told me I was stupid for going chip heavy. The reality is, what was probably more not great in hindsight was being interest rate sensitive with part, which is, the end phase of Tesla. But that's where your extreme bearishness is now, right? You've gone from extreme bearishness on, let's say, Meta to chips, and now it's the interest rate sensitive, thanks to higher for longer, that have the extreme bearishness. What's very interesting, though, is that we see this time and time again. I mean, look at even during COVID. So you go to periods like COVID, and you look at the idea during COVID was, a company like Pfizer is going to go to the moon forever because of the good old vaccine. And what's remarkable is, who would have thought that after the pandemic, the movement of Pfizer stock would do this? Well, I mean, now in hindsight, it's like, well, yeah, of course, vaccine sucked or this, that, or whatever, fine. But during the pandemic, nobody thought that. Of course not. And so you always have sort of the opposite happen of what the mass population seems to think. I always think that's very interesting. I remember, Simon Property Group. I remember trading them around $46 because malls were going to die. I still think malls are going to eventually die. I still think, I don't want to buy a mall unless you can get to really good, entertainment-centric malls with really good restaurants and music. But, most generic malls will probably fail. The high-quality ones will stick around. But anyway, I mean, look at this. When people were most bearish on shopping malls, you ended up with a 6x on Simon Property Group. What's another one? I don't know. The cruise lines. I know they got really cheap there for a while, and they haven't done extremely well. What'd you get down to? You got down to about $7. You're at 16 now, so it's not great. You've been struggling with the cruise lines for sure, but I don't think we had I'm not aware of a single cruise line bankruptcy that we had since COVID. Kind of wild. What's another one? I mean, I guess we could look at maybe a Southwest or something like that. They haven't come out of the woods as well, right? You're up maybe a third since the lows of the pandemic. So the airlines and the cruise lines haven't recovered as well, but it is very interesting to see the difference between sentiment and in actual reality. And I think sometimes that's due to if everybody's estimates plummet for a company and everybody becomes very bearish on a company, then quite frankly, any sign of progress attracts renewed investments. And so, yeah, it might be so that you end up having a very, very bearish cycle on for example, interest rate sensitives. But what happens is you don't actually need rates to go from high back to low, right? If this is low, if this is high. You don't actually necessarily need rates to go from high to low to win on interest rate sensitive again. Because while you were going up with rates, what happened was you got earnings that were basically a little bit of a lag here, but then you get miss, right? So you keep missing on earnings, right? Everybody gets bearish, everybody writes down stocks, everybody becomes very frustrated, everybody goes into the plays that are working, and they sort of sheeple into the stocks that do very well. And then what happens is, eventually, we know this will happen this year, rates will start coming down again. So we'll have a little bit of a lag, maybe you got another miss in there or whatever, but you start getting forecasts that are better. And then what happens? Then you start getting beats, and you get beats, and you get beats. And then all of a sudden, it doesn't matter that rates are still substantially higher than what they were. What matters is that, wait a minute, we're on an uptrend rather than on a downtrend. That is very important for sentiment. And so that's very, very commonly what happens with, really frankly, the psychology of stocks. Is when everybody is most bearish, the estimates just become so low that it's almost impossible for the company not to beat. Of course, that's a very painful process to hold through, but it's also very common. It feels a lot better to, imagine this. Let's say you sold Tesla Friday, okay, and you bought Nvidia. And today you wake up and you're like, Tesla's down 1.5. And Nvidia is up 3.2. Of course that feels great. Will that end up proving out to be the best play? Right? Look at for example, what's Tesla going to double? Well, Tesla going 186 to double is a number it's been at before. In the 330 or 360s. Like 370-ish. Nvidia doubling from here. Boy, $1,200? That would start getting a little expensive. Mostly because something to consider with NVIDIA is, even though I think they've had a very good PEG ratio at 400, I still bought NVIDIA shares at 400. I'm not buying at 600. But let me look at their latest PEG. So if I now go 661, sorry, let me take the pre-market number here. 682.38, 1232. Yeah, so now we're trading at 55.4. Okay, so 55.4. And our growth trajectory is, that's negative, plus 14.6. 94.6 divided by 4, 2365. Yeah, we're at a peg of 2.24 right now on NVIDIA. Okay, so a double peg, I mean, you could double the stock right now and assume the same growth, okay? So double the stock, assume the same growth, 4.5 peg, not a chance, in my opinion. Like, you would have to have a substantial beat on growth on top of the substantial beats on growth we've already seen. That could happen. But without additional massive rewrites up on growth, I don't really see a double as possible with that PEG ratio. Not at this point. And remember, I said I see this stock going to $600 to $700 in 2 years. Okay, it happened in 1 year. Well, it happened about 9 months. 9 months or so ago, I thought this was going to be a $600 or $700 stock in 2 years. I did not think it was going to happen in 9 months. Okay, so Tesla, on the other hand, so you look at a company like Tesla trading for, say, 186 now. We're going to drop into that 323 of EPS for this year. Okay, that also puts us at the same PE ratio, roughly, for NVIDIA, right around 57. But now we're going to take the growth trajectory, 31.2, 31.9, 35.9, and 26.9. Okay, we're going to divide 125.9 divided by 4. There we go, 31.4. Okay, now I'm going to go, what was it, 57. 57 divided by 31.47. PEG ratio of 1.81. So you are finally cheaper on a PEG ratio basis by about 40 to 50 basis points on Tesla than you are NVIDIA. And then you ask yourself, okay, so where do we think we can actually get real upward revisions in growth trajectories? Well, that's everybody's bet, right? Those are the bets. So that'll be really interesting. We shall see. I want to look at Apple as well right now. I like stocks usually at a peg of around 167. That's where I like to see them. And then I want to see growth from there. So, like, for example, if I do a forward peg ratio on Tesla for the end of 2025, for example, I take the 57, or sorry, the price of 186, divide that by 424. Yeah. Now you're at 43.86 times earnings. Divide that by the 33-ish% growth. Puts you at about a 1.32 peg. It's just an example. You could do that. You want to be careful about going too far forward, though, because you're absorbing your growth rate. But anyway, let's look at Apple in comparison quickly. I got the bell in about 6 minutes. So Apple in comparison, and then Meta. We should do all of them. 185.85 divided by 662. That gets us to September of 2024. We're trading for 28 times earnings at Apple. Okay. 28 times earnings at Apple, but the growth trajectory for this one, 7.8, 9.2, 9.0, 14.9, 40.9 divided by 4. Yeah, we're looking at about 10.2 times growth. 10.2 percentage on a growth rate. So you're trading for about 2.8 peg on Apple right now. So Apple's the richest out of all of these, just because the growth rate is so low. And when we go to Meta to compare, growth is everything on, well, they're growth stocks after all, right? Okay, so Meta at 474 divided by 19.9 trades for 24.7 times. See, but it has greater growth than Apple projected. 24.7, 24.7, 24.7. 24.7 divided by 16.3. Meta's at a 1.5 peg. Meta's actually still got the best valuation out of all of them. That's wild. Well, that's really cool. So you've really got some excitement there on the ad spend. Yeah, and for me, it's always been interesting. I've always wondered, where is the growth in software spending going to come from with AI? There's a chance it's actually in making and providing the ads and having more effective ads. That would be Meta, not so much a SaaS model company that could actually be negatively affected by AI. Okay, let's go with Enphase quickly. 101. Well, it's more like 100 right now, pre-market. Divided by its EPS projection for the end of the year of 4.39 means it's trading for about 23 times. 23 times, and then you've got growth. Let's see here. Add these numbers together. Certainly had an underwrite of growth here that's been lower. 53.9 divided by... Boy, Wall Street's gotten a little bearish here. Okay, 13.5 is your growth rate expected. That's pretty low. So go to 100 divided by... This got really rewritten here. 22.7 divided by 13.7. About 1.65 on Enphase. And that's the problem, is when your growth projections plummet, the peg goes up really quickly. Because this was under one peg around a similar price for quite a while with higher growth projections. All right, so we are now 3 minutes away from the open. So where are we on the Qs? Oh, almost green on the Qs. Let's go. Oh yeah, Amazon definitely had nice ad growth. Absolutely. Patrick Bet David interview you did was really good. Yeah, I guess that was pretty cool. Really enjoyed that. Yeah, I do think we have Palantir. Let me see here. Palantir, I think, is this afternoon. Earnings, Cal. Okay. Yeah, Palantir's this afternoon. If I go into the earnings estimates for Palantir, we're looking at an estimate of 7.6 cents, gap of 3 cents, revenue 603 mil, net income 177. Implied volatility is up there, 12% implied volatility. Let me see how the historic is doing. 1 minute to the bell. Oh, it's about average on volatility right now. Ay. All right, let's listen in.
It has to rework 50 of its 737 MAX jets slated for delivery due to some misdrilled holes on Spirit Aerosystem fuselages, Jim. Meantime, you got the FT with these...
Oh, yeah, I would be very bullish on Trade Desk with what we're seeing with advertising from Meta and Amazon.
Airbus position already, and it's been a very good relationship. So, I mean, maybe this is finally a customer of some size that the previous CEO spent a lot of time with me telling me that Emirates was Boeing's, that Emirates was going toward Boeing. And I thought that this showed me that perhaps the previous CEO, Molenberg, his opportunities toward Emirates may be on the road.
Wow.
Pick up on that point in a moment. Let's get the opening bell and the CBC Real-Time Exchange and the big board specialty chemicals company Element Solutions 5th anniversary, and the NASDAQ analytics software company Cognyte making its 30th anniversary as we get some negative breath here on the open following.
Yeah, it's pretty red there. Let's say that's about 85% red. looking at, you're trying to push green here on the Qs, but Nvidia just gave up about 0.5%. You've got Tesla still down 2. Estee Lauder's really running at 17. Enphase down 3.2. Super Microcomputer continuing its rally after those Facebook earnings, really suggesting more server spend. Big deal there. Super Microcomputers really big in the server spend area, and not only in AI, but just sort of servers broadly. Google up about 86 bips with green candlesticks. Apple up about 80 bips with red candlesticks. Fair Isaac, FICO up slightly. Etsy's down slightly. We've got, let's see if we got any other movers here. Movers. Chipotle up another percent. 24.82 here on Chipotle. Palantir running as we're going into earnings enthusiasm, it looks like. You've got 3.85% on Palantir, down 4.75 on Plug. And let's take a peek here. Caterpillar up 5. Palantir now up 4. Nvidia up still 2.5. Apple just broke through 1% along with Bitcoin, but still sitting at 43.3 on BTC. And let's see here with the Qs. Kind of still stuck in the same spot. Okay, good. So we'll take a look now at, let's see here. Oh, if we jump into, so we just looked at, you know what, let's look at Amazon's peg as well really quick, mostly because we've been looking at some of these pegs. Remember, I like being around 167 or so, and Meta's below that, so good for them. And if we go to an analysis on Amazon, let's take a peek at Amazon. All right, Amazon's down about 1% right now. We have a stock trading at 170 with 2024 earnings expected at just under $5. Gives you about 34 times earnings. That's what you're trading for. So just remember the number 34 for a moment here. Looks like we're going to be about a 2 peg here, but let's see. All right, so now we're going to take 75.6 divided by 30. What did I say, 32? I think so. Yeah, it puts you at about a 2.3 peg, kind of there with Nvidia for Amazon. And how about MSFT? Let's try that one. Then we've kind of, I think then we've almost hit all of them, all the Mag 7s. So if I go Microsoft at 411, boy, they've just crushed it. 1158, we're sitting at 35.5 for 2024. 35.5. Try to remember that. 35.5. 35.5. All right, then we're going to go for, throw in these numbers for growth. 59.1. 14.75. So 35.5 divided by 14.75. 2.4 peg. A little bit more on the rich side. But then again, you can get a company like Costco that's pretty rich and it's still, you know, it still sits green. So you have to be careful about that as well. I'm pretty sure Costco is like a 4 peg. I'm gonna rerun the numbers here quickly because I want to see what's going on here. That'll be the last one I do, and then we'll look at a little bit more news. So if I go 709, which is remarkable. 709. I wonder how much of that is pushed by the indices. Yeah, we're trading for 45 times earnings on Costco right now. Just literally ridiculous. You need a massive rewrite on this company. This is just insane. So this is trading for, well, sorry. Its growth is 11.1. That's the growth. 11.1. 45 divided by 11.1. Yep, trading for 4.05 peg. Nuts. Crazy. All right, whatever. So, as they say, the stock market can remain, what is it? The stock market can remain irrational longer than you can remain solvent. I love that phrase. It's true too, because it just it's what creates a lot of the frustration in the stock market. Look at Google, really getting those green candles there on Google. All right, Take a listen in here.
The demand for these products are insane. Now, someone might have said, wait a second, this has got to hurt Eli Lilly because they're going to have more, they finally have the capacity to meet demand. No, and Eli Lilly's up because this is just one more sign that you can't make enough of this stuff. There's new trials coming out. We'll be speaking to Eli Lilly, but I do think that this is once again a referendum that there's so much demand, and there's no way they could meet anywhere near the supply for this. I also find, Dave, maybe you can stop me on this, but
yeah.
I don't think it really created a lot more ability to make it.
No. In terms of timing and the close, acquisition expected to have low single.
See, I personally get excited by comments like this, and I see them on the daily basis because it's a very popular argument to make when a stock is falling, and it's very difficult for somebody to defend a stock when it's falling because it makes you look like a fool, right? But so the bias here is that a comment like Andy's comment here or whatever, Andy's card, whatever, Enphase is dead, residential solar is dead. I personally think it's fascinating because I look at a company with over 45% margins on solar inverters and a company that is high quality product at a time where other solar companies are essentially substantially slashing their actual business growth plans, laying off workers, whatever. Very much the same as you see with Tesla squeezing out other auto manufacturers. The idea that an entire industry is dead because it goes through a cyclical downturn thanks to higher interest rates is remarkable to me. But that's okay. Everybody's entitled to their opinion and can make their bets accordingly, and only time will obviously tell. The unfortunate thing is that time could take another 6 months. It could be another year before you really start seeing the trend of interest rates. And then, of course, usually what happens is as stocks finally solidify a bottom and start rotating up again on beats, there's always the idea of, you've got the second plummet is coming, the double dip is coming. And then ultimately, folks look back years later and they're like, oh, wow, that 3-4x or whatever it is. There are no guarantees, obviously, on any of that. But it's usually that sentiment that I consistently see at the bottom. If we go back to some of the videos I made in the November era of 2022, the amount of people that were writing that chips were dead, that NVIDIA was dead, is shocking. And just to think that now, NVIDIA is what it is just sort of mind-blowing to see that shift in sentiment. I find it very interesting. Yeah. So, but again, that's psych. Okay, so what else? Listen in here.
You started the show by talking about earnings and the takeaway that we've gotten, but I would argue that when it comes to technology, the one takeaway that investors seem to have is that AI is ascendant, it will never stop, and there's going to be more and more spending. And that is reflected.
The Goldman NVIDIA piece that we talking about?
I didn't even see that piece. I'm just looking at a stock price that's up another 3.5% this morning. That is NVIDIA.
I said own it, don't trade it.
Now very close, Carl, to a $1.7 trillion market value.
All aboard.
It's really not that long ago. Of course, we can all remember when it just crossed the $1 trillion mark, and here it is 70% higher.
Well, did you have with the Meta comments? Zuckerberg, I wanted to know whether Zuckerberg bought so many of the graphics cards that he blocked other companies. But there's a Goldman piece this morning which talks about all the large, NVIDIA, the now beleaguered Alphabet, I'll call them that. Obviously, Amazon, Meta, Microsoft. They're just buying so many of these that Zuckerberg, I felt, maybe he's buying now for stuff he doesn't even know about yet. He's betting he'll need them.
Goldman was at 625. They go to 800.
That I do also think is interesting, is how many companies are loading up on chip stocks, making a bet that, they'll find a use for them. We just have to be part of it. And then do they actually find a use for them? I will say it does seem like Facebook has figured out how to, at least in the near term, increase the effectiveness of their ads to where either they've convinced people to advertise more, the market is comfortable with advertising more, or people are wanting to get back to positive sales growth, so they're getting into advertising. People in businesses and companies. Maybe AOI is part of a coincidence to that. Who knows? But for right now, I always like to say the earnings speak for themselves. And so far, they're doing fantastic. Keep listening.
Where do you find these footnotes?
The NVIDIA blog from November, it's finally come true. It's really excellent.
Meantime, last night, B of A had a desk note basically just musing about which company is going to make AI click for the consumer.
Interesting.
And this desk's view was that it would be Apple. Whenever that is, it would be Apple.
Well,
do you think that's right?
I think that Samsung right now has some pretty cool stuff where you can just draw a circle on something and then like let's say you did Phosphora, like my wife's mezcal, you circle it, then immediately you would see everything because it out pops the Google entry. That could be Edge. We don't know, but the idea with Edge, just so we know, is that this was. David, that this machine itself will not require you to go to the cloud. It'll be right on there.
And eventually right in there.
Yes. Yeah. But it matters because if this is more powerful, it will redound to Apple's benefit. And Apple's obviously AI, but Apple's best days are ahead of it.
Wow. NVIDIA. Wow.
Let's go to break.
I told you about it. You said we were...
All right. So somebody here mentions the CPM's down on Facebook. Why don't we actually just go and look at it specifically here? I think you were talking about price per ads, but they had more of them, I'm pretty sure. So let's take a look. So monthly active users. Here we go. Ad impressions and price per ads. Ad impressions delivered across the family of apps were up 21% year over year. See, that's what I mean here is that overall, people are advertising more, right? Average price per ad increased 2% year over year. Oh, look at that. So you have more advertising and a higher price. That's on the year over year. However, for the full year of 2023, you actually had a 9% decline. Okay, so this is interesting. So this would be a Q4 to Q4 comparison of 23, of 22. Here you actually had a 2% gain. But if you go 2023 compared to the full year of 2022, you actually had a 9% decrease in ad cost per ad. So there's your CPM comment. So both could be true, right? At the same time, you could have whether there's more inventory available, allowing more people to advertise at lower cost. That's possible. Either way, though, it seems like you've grown the ad business to where you're serving more of them. And then, of course, to compare to whether that's effective or not, we just look at the income segments. So let's get to the specific financial statements. It should be at the bottom here. Here we go. Okay, well, we don't have segments broken down, but we do have, look at this revenue growth. I mean, where is it going to come from other than advertising? Well, I mean, there's Reality Labs, but let's go do investor relations, Meta, 10K. Let me get there, annual. And we can segment that out pretty easily. Well, predicated on them actually giving us the segments, which they should. Okay, I have their 10K. And we're just going to open that really quickly. Okay. So let's go in over here. And we're just going to look for segments now. Segments. Let's see here. Still just one line. I might just Command F here in a moment. But I should be able to around... there it is. So look at that. Here's your advertising revenue year over year, right? And you can actually see that over the last 2 years. So you had a 1% decline from 21 to 22. But then you had a 16% increase in advertising revenue compared to 2022. So you've really actually done well here on advertising revenue at 131. But not only that, what we could do is we can look at the quarter. So the last 3 months, we had 40 billion in ad revenue at Facebook. Okay, what about the 3 months before that? Well, that's easy. We're just going to go to the October 10Q, and then we're going to go to the statements. And now I just have to remember what the numbers were. Ooh, look at that. How interesting. So you had 40 billion in the last 3 months, right? Which makes sense because it's a seasonal spending time. You had 34 billion in spend the 3 months before that. So that bump of 20%, was that just the season, or is the company growing? Well, that's hard to say. But you did have sequential growth here as well. Next quarter would be interesting to compare to. Another thing you could do is you can compare that Q3 quarter, just to get rid of the holiday season. Compare Q3 to Q2 and see if they're growing between the two. So we were at 34. Yeah, see, look at that. And the 3 months before that was, you had $2 billion of growth in a quarter from Q2 to Q3. So consider that. You go to 32 from 30, or 234 from 32. That's growth of 6.25%, okay, in a quarter. Well, if I annualize that at the 2 to 3 rate, quarter 2 to quarter 3 rate, that would be 25% growth per year. It's actually, they're growing. It's very good. You can't slide them. Very, very good. Oh, did the PMIs come out? Let's take a peek here. Oh yeah, I actually think we also have, let's see here. Oh, those are boring. S&P services, 52.5 versus 52.9 expected, so slightly slower. S&P global composite PMI, 52 versus 52.3 expected. You know, we do have the ISM services prices paid coming out shortly. It might be worth staying live to cover that so we can see what those numbers are, and then go into the course live after that. I might do that. It was just because I want to cover that together. So, and then we'll get into analysis in the course live, so I'll change that to 7:05. We'll go in the course live. Okay, so let's adjust that quickly. 7:05. There we go. That'll give time to get another cup of coffee. Gotta get the coffee. Okay, good. So, what else? So that's very interesting on Facebook. Still that good ad growth. What were they projecting anyway for the company? So those were our estimates, just based on what we're seeing here. But let's actually get into the fundamentals. Oh, this, yeah, and the forecast is that they're only going to grow like 14%. So they're certainly exceeding Wall Street's growth at this point. The question is, will that growth continue? You know, that's what people bet on. So we'll find out. 12 minutes from the release of the ISMs. And then we're looking at 4% right now on NVIDIA. Estee Lauder, oh, gave up a little. Look at Super Microcomputer, another 5%. Holy smokes. Look at that. Another one. Another 5%. Wow. And then Enphase, another 5% to the downside. I'm actually surprised at Trade Desk. Look at Trade Desk downtrend while Facebook and Amazon have been crushing it with ads. Very interesting. So let me see when their next earnings are. Trade Desk earnings. Let's see. Trade Desk earnings. Don't know. Q4 earnings. When are they? Q4. I don't know. We'll figure it out. Anyway. There it is. February 14th. Oh, okay. So 9 days. 9 days to go. Fine then. Good. Okay, so let's see. What else? Yep. NVIDIA holding on to that 4% there. Bitcoin's 43.2, dropped a little bit. Palantir gave up a little bit. It's only up about 80 basis points. It was doing a lot stronger. Alibaba's got a couple percent there. Dropped to the low side. And, of course, Open Door, very interest rate sensitive. Enphase, Solar Edge, Canadian Solar, the usual cohort of sadness when interest rate expectations stay higher. Let's see how they've adjusted in just the last hour or so. Last read was 19%. Now we're at 16%. That's the lowest we've seen for the March rate cut odds. And we'll see how these numbers adjust when we get our ISM figures here in a moment. All right. Let's listen in here for a bit.
And those will help us serve that growing demand in power generation around data centers. Also, we believe there's an opportunity over time through the energy transition as more renewables are added to the grid. Our large reciprocating engines and our gas turbines can be used to provide grid stability. And those engines and gas turbines burn a wide variety of fuels, natural gas, biofuels, hydrogen blends. So again, we're very excited about what we see as future growth opportunities moving forward.
Now, Jim, one of the things that has dogged you, or dogged your company, and I think incorrectly, is that there had always been a belief that there maybe was too much inventory. I think you put that paid. That's no longer the issue. If anything, I would think that you do have an equipment shortage. You did note that there could be a little dip in some businesses, which I think is one of the reasons why the stock is coming down. Can we clarify that? Because I think that was that the dip, so to speak, was in one bit of business and should not color 2024 earnings.
Yeah, as we think about dealer inventory, it's important to keep in mind that our dealers are independent businesses and they make their own decisions about their inventory. And the decisions they make are based on a variety of things. One is availability of equipment, and the other is what they see happening in the marketplace. And so as the supply chain constraints have started to ease, our availability has improved, and that's allowed dealers, again, to make different decisions, and our customers as well, as to when they place orders for machines. But the bottom line on dealer inventory is we're squarely in what we consider the appropriate typical range for dealer inventory, so we're not concerned about that at all.
Now, I did want to talk about the fact that supply chain is now good. We spoke to Nucor last week, and one of the things Nucor said was actually your business, not your business specifically, but the business that you're in, machinery, was weaker. It obviously wasn't you, and I think that when I see supply chain ease, what that tells me is gross margin going to get better this year, which matters tremendously, and also I think you can meet the demand of the hottest units.
Well, we have been working very hard to increase the resiliency of our supply chain, and we're continuing to work on that. As I mentioned, we have seen supply chain conditions ease, but we also talked about the fact that we are still facing some constraints around large engines, and that has an impact on power generation and gas and a bit on our larger machines. But again, we feel comfortable with where we are. We're making the right kinds of investments to continue to profitably grow our business.
Let's talk about infrastructure, because I was surprised, actually, you didn't need to emphasize it, frankly, because you have so much core business. But I have to believe that when we start talking about chips, talk about IRA, that this is not something that necessarily ends in 2024. If anything, it seems like it's just starting.
Well, we had a strong 2023 in construction industries, and we told our investors today that we expect another strong year, particularly in North America in 2024. And of course, a lot of that is underpinned by the infrastructure investments that are government supported. So again, we do feel good about what we see in 2024. And it does take time for permitting to come through on many large projects, as you know. So we believe that the infrastructure investments being made by the government will play out over time as those permitting processes conclude.
In the old days, I would expect that you would have some sort of a relationship maybe with a business that may be in construction. Earlier this year, we announced the success of collaboration with Microsoft, and Power Systems demonstrate the viability of using large format hydrogen. I want to combine what you're talking about, which is that a new customer set with, and just drill down, because you did mention it, to sustainability, because this is, again, a market that's 2026 to 2030, as far as I'm concerned.
Yeah, so we're investing in a variety of sustainability initiatives. One is making our tradition.
Yeah, this part's boring. All right. So what else? Let's see here. Let's look at the bond movement. Bond move, we're sitting at 8 basis points on bond, 8.8 on the 10. And the 2-year is sitting at 6 basis points. Bitcoin just dropped a little bit, 43.1 now. Oil under 77 on the international blend. And we are awaiting those ISM numbers to see what's going on with the eco. But interesting about Caterpillar, I mean, it's such an industrial... People look at Caterpillar as an indicator of the strength of the economy. And not all the industrials have done as well as Caterpillar with their earnings. Caterpillar's done very well here. So I think a lot of people are going to look at Caterpillar and say, hey, that's a great sign for the overall economy. Let's take a jump in here. Yeah, look at that. You're up 3.1 right now on NVIDIA, on Caterpillar. You're up 4.5 on NVIDIA. Snap on their jobs cuts went negative about 1.64. Estee Lauder still holding on to that 15%. Look at Enphase, complete destruction there, 7%. Intel's up about 0.5%. ASML's pretty flat. That one's been pretty great performer. Super Microcomputer continues its rally. Look at that. Beautiful. Even Google up 2%. Okay, 4 minutes to ISMs.
And how we held on and we got the gain in Danaher. We're going to tell that story tonight. I would not be self-referential. I am reverential of Jason, whom I think we would all admit is a guy who doesn't get enough credit because we don't talk about behind-the-scenes people who would make us look smarter.
Yeah, all our behind-the-scenes people don't get enough credit.
Yeah.
Okay, they're going to go to ad here before the ISMs. 3 minutes to ISMs. McDonald's. France hurt by boycotts over Mideast war. What else do we have here? Let's see. Okay. Oh, yeah, no, we saw that. Oh, okay. 1,600 net restaurant additions by McDonald's in 2024. 2,100 openings. That means they're going to close 500, probably lower performing ones. Okay, let's see if there was anything else on some of these morning earnings. We saw Cat. We saw McDonald's. We're now looking for... Sometimes as their earnings calls come in, we can start getting a little bit of a sneak peek. Oh, Tyson Food came out this morning as well. Caterpillar, lower mining machine revenues, solid Q4. Fine. Okay, all that's boring. Let's go to Tyson. 2 minutes to go to ISM data. Okay, Tyson comes in with adjusted EPS of 69 cents versus 24 expected. Q1 sales 13.32 versus 13.27. Q1 EPS 30 cents versus 80 cents year over year. Okay. So, one of the things you found was that Tyson was able to raise chicken prices heavily during the inflationary period. And it led a lot of people to say, that's it, like they have the most pricing power in the world. This company's going to take over. Everybody wants chicken. And the amount, the plummet, the rapid plummet in chicken prices was very entertaining. Very, 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 very entertaining to watch. It's sort of, everything's still more expensive than where it was before 2019, but relative to the shortages that there were for a while, it's amazing to see how rapidly these prices can change. Oh, I didn't know Bolero was a public company. Bolero reported earnings. I've been to a Bolero before. Bolero's revenue, $305 million versus $300.7. Oh, I wonder. Oh, net loss of $63 million versus a profit expected of $21 million. Interesting. I wonder how that affects a company like Dave & Buster's. If Bolero ends up moving. Yeah, see, they're up 5.6%. I look at Dave & Buster's. Oh, they're down 2%. But then again, they ran up to $50. $54 is wild. Dave & Buster's outperforming Tesla. Everything's outperforming Tesla. So ISMs looking for, okay, prices paid. Oh, that's not good. Comes in at 64, which is well into the expansionary territory. ISM Services Index 53.4. That's more bullish than expected versus the 52. Employment comes in at 50.5, so still somewhat stable, but well up from the 43.3 we had previously. And then services new orders 55. So let's see if the queues are moving on that at all, or if that's already kind of built in. Not much. Had a little bit of a red candlestick there for a moment, but that's certainly an expansionary prices paid. 64. The last read on that was 57.4. And if I go to the actual report, U.S. services gauge rises to 4-month high while prices pick up. Yes, exactly. Let me get the actual report. Services. Here we go. Okay. Where is prices paid? There it is, prices. Interesting. Services PMIs. Prices increasing faster. That's the current trend. Increasing faster. Not great. It's interesting. I don't see that in any of the earnings reports. Why are they seeing that? Commodity, they see... What do they see going up? Electrical components, food and catering, construction contractors, skilled labor. Still skilled labor. Diesel fuel, gas, gloves, soybean products, copper down. Prices. Prices increased for the 80th consecutive month. Wow. Largest increase since August of 2012. 19th in a row. 15 services reported an increase in their prices paid during the month of... And remember, these are prices paid for industries. These are not consumer prices. But they're prices paid for industries. So think, PPI. But anyway. Real estate, rental and leasing, arts and entertainment, recreation, construction, educational services, healthcare, wholesale trade, utilities, everything. The only industries reporting a decrease in prices in January were agriculture, forestry, fishing, and hunting. You wonder how much of that is due to January, but it's a big number. That's a big number. That is not a bueno for looking for faster cuts anytime soon. So that kind of report should officially solidify no March cut, but we've been waiting for that to get solidified for a while. Thought there was a chance the banking crisis and the end of the bank term funding program would kill it. ISM's not great. So if I go to Fed monitoring, let's see here. I don't think this will update quickly, though. No, that's still updated on the old number at 16% for March. That'll change, though. Let's see how the bond market moved. Yeah, up 11.7% now on the 10, 9.6 on the 2. All right, more work to do. So that is pushing the indices down 0.3% there on the Qs. Tesla now down 3.5. It's at 181, and Enphase still stuck at 70. Apple's green, SMC or Supermicro Computer, and Nvidia, as usual, do not care. All right, folks, thanks so much for being here. We'll see you in the next one. I got to make a coffee and get to Course Member Life. Bye.